All right, good enough. Welcome to the Closing Beat, everybody. How we doing? Happy Friday. Welcome, welcome, welcome. We've got a lot to cover here tonight, so I'm just going to get right into it. Also, if you're one of our customers and you're willing and have been on our list for beta testing, our new dojo or our new client portal, the invites will be going out shortly. We're going to kind of show you what we're looking for, what you should be seeing in there, and kind of what we want you to test and everything. So Cody will actually be sending that out to you if you're on our list, and thank you so much for helping us out there. Hey, we're financial advisors here at Jazz Wealth, and that was just a little update to our customers. We're building our own portal and all this good stuff that I'll be showing here as we go. But today we're talking about the stock market. If you look to the right-hand side of your page, just a nothing day. We talked about this yesterday. Really low likelihood of today being an exciting big up or down day. And so basically we finished the day pretty much flat. If you look at the S&P, just down a touch on the day. We got a 1-week spending bill from the government. They're sending it to the White House to get signed here to fund the government through the next week. The stock market popped on that news midway through the day, but it was met with a lot of catches, and that is that they are going to fight hard on the stimulus bill to, basically, or they're going to shut down the government. So yeah, the fight is on there. Let's take a look and see what's going on here. We're looking at the charts. Got the S&P on the screen. I'll zoom in just a little bit for you. Actually, I promised I would show this part with bigger numbers today for Mr. Aaron, so let me do it this way, just for today, just over here, and then we'll use the sector page. Here is the S&P 5. Well, let's go over here and look at it this way. S&P 500, slight gain on the, slight loss on the day, but really nothing special. I mean, it's one of those days. If you miss the day, you're not kicking yourself. There's nothing really to worry about there. Overall, after being up 15% year to date, we're pulling back here just a little bit. Remember, we shared earlier in the week that this is kind of odd for the stock market to be up this much. I'll go over here, pop over this chart. This was a class that we did for customers to show how often the stock market has a return between certain percentages. So the other day I showed this and said very few times, 8% of the time right here, does the stock market gain between 15 and 20%? Well, we were up just over 15% the other day, and we said, look, the market doesn't like that. It's likely that we keep plowing forward into the end of the year, or likely that we fall backwards into that 10 to 15% range there. So that's what you got, right? This 15 to 20%, very rare that we do that. We know that the stock market doesn't like to finish out a year between 15 and 20%. So if you had to bet, you would bet that we go over here, or we finish the day year with maybe a little bit of a pop there. Hopefully we get the pop, because I know a lot of you are excited about that and would like to see the markets higher into the end of the year. If we go look at the Russell here, it's the best performer this week. It's up about 1% due to the small cap growth area, really, and value, small cap value as well. Once again, they lead the way. The small cap fund here killing it. Our small cap fund here at Jazz Wealth doing well. Last night we covered that for customers, the performance on that one, which is beating the market by I'll just say many multiples of what the stock market is currently up, largely because of this quarter's value stock pop, gains in the value stocks there. So this quarter to date, by far the best performing of all of them and doing well. If you look at something like the IWM, it's up 26% just this quarter. We're not even done with the quarter, right? We're at the back end of it. So obviously anything small cap that you have in your 401ks or here with us at Jazz Wealth, if you take a look at our class last night, we reviewed our portfolio. If you're not familiar, by the way, we manage our own portfolios here. We're like the only advisor that doesn't say, yeah, we'll help you with retirement, and then we'll just go buy mutual funds that you could just buy anyways. We build our own funds and try to add value that way by removing expense ratios, fears of commissions or fees or trips to Cabo or whatever they do with these mutual funds. You'd be surprised, actually. So I don't know, point that out. Let's take a look at the Nasdaq here. Comes in dead last this week in terms of performance. Still up 8%. I mean, it's not bad for the quarter, but still dead last there. Our watch list a little bit later, we'll talk about how the stock Nasdaq is at highs, or basically at highs, but it's not because of the stocks that we're used to seeing there. So I'll give you some interesting stocks to take a look at in just a moment. If we look at the Dow here, we're sitting here near highs, up almost average for the month of December. How do we know that? Remember, we talked earlier in the week about the average performance for the Dow each individual month. So we went back 100 years to give you this data here. Here's the average performance. We are currently in the month of December. Average performance 1.43%. We were up just about 1.15%. So we're trading about average at the moment. And if you look at percentage of positivity, you could see that December is actually the most highly probable positive month, I think is how I want to say that. Its positivity rating of 73%. In other words, the Dow is positive 73% of all Decembers over the last 100 years, which means 73 out of the last 100 years, if you're looking at that. As far as the stock market here goes today, oh, by the way, one more thing. Here's the average composite chart of the Dow. In other words, this is over the last 20 years, the average performance of day 1, day 2, day 3, day 4, blah, 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 all put together. You can see that the Santa Claus rally tends to kick in towards the later part of the month. When we come back on Monday, that will be the later part of the month. We'll see if the stock market or the Dow in general continues to plow forward ahead there. We'll see. So not likely that we're going to see a pullback in the Dow if you were looking for that, if you're going by the stats there. In the Dow today, Disney. By far your biggest gainer, Disney. Huge day for Disney, and I'll ask you, is that odd? You guys know, I've seen the comments where you tease me about saying, well, that's odd. Is it odd for Disney to gain more than 13% in a month? Well, we can actually test that. We've got a tool here that we're working on. We're going to take a look. I didn't actually look at this by the end of the day here. Let's see. Is Disney greater than 13% in any one day period? Let's go back. We can do 30 years on this one. Is it odd? So let's have a search and see what we come up with. For Disney to be up 13% or greater has happened only 5 times in the last 30 years. Actually, if you just look over the last 20 years, that's the only times it's ever happened. We've got today's gain here, 13.59%. Yesterday was just a small up day. Last time it happened was in, March, actually, 14.4%. So 2 out of the 5 times have happened this year already. You got 2008, 2004, and where's the biggest? The biggest was 2008, 15.97%. What's really interesting, I think, is what if we go forward? What does the next day tend to do, just for fun, when Disney is up 13% or more? Well, we don't know for tomorrow, or what will be Monday in this case, but we could see all but one time the stock was actually positive. Anytime it gets higher by close to 16%, that's the time where it's maybe stretching just a little too far. But in other words, you could look and see, wow, when Disney has a really strong, well above average day, then it tends to continue that momentum going into the next day. So if you happen to own Disney, which we do, I will hope that that happens for you. And because it's Disney, I owe you a Disney fun fact. Oh shoot, what was my fact? Okay. It's actually closed right now. If you go in Hollywood Studios, used to be called MGM Studios, that's what I call it anyways. And one of the coolest attractions there is actually a show. It's called the Indiana Jones Stunt Spectacular. Just planes flying, you get to be in the show and all that. There's whips cracking, you know, all kinds of good stuff. And well, when you're waiting in line, you kind of pass the line there. They have a Jeep, and then there's like an archaeological kind of a dig or whatever there. There's one rope that you'll see there. It's one of 3 ropes in all of all the different parks there between Magic Kingdom, Epcot, Animal Kingdom, I won't give it away, and MGM Studios or Hollywood Studios. Well, anyways, there's a rope there, and the sign says something like, warning, do not touch the rope. But the knot is crossed off, so you're allowed to touch the rope. Go ahead and touch the rope, see what happens. You actually have to give it a pretty good tug and see what happens. I won't spoil the surprise, but it's one of 3 ropes in all of the different parks that you're actually supposed to pull, even though it tells you not to pull. And somebody let me know when you go. Tell me what happened there. And the show is closed, but try to go to the rope and pull it anyways and see what happens. Anyways, that's your Disney fun fact of the day. Another fun fact, we do 3 videos a week that are free to you guys, to the public. How's that for a transition?
Yeah, I mean, it was decent. I just feel like you left me hanging on the back.
I'm leaving you hanging. Mr. I never go to Disney World. You got to go. Pull the rope, see what happens. And I'm not going to tell him after the show either. Anyways, 3 videos that we do. This week we did which retirement accounts should you have in typical Jazz Wealth fashion, not general, very specific, awfully helpful to tell you why you would want to have different retirement accounts and specifically how that will affect you for the positive. Wednesday we did the 1 rollover per year rule. So big deal there. And then today we talked about do the markets go higher when everybody's positive? Bullish sentiment. How does that affect it? Last night, our Wine and Wealth class right here in the old speakeasy. You can take a look. This is where we do the class here. We've got our drinks and everything. We just kind of hang out. I teach everything, something new. And last night we covered market performance. We talked about how our funds are doing, the good, the bad, and the ugly. It's not a lot of ugly going on right now. So be sure to check that out. And in our research site, are you a member of our research site? If you can't be a customer for 13 bucks a month, you can join our research site if you'd like. I did a post last night on this one about retail sales, the stocks in the retail category. Would they have a boost going into the end of the year? And we kind of broke them down to talk about the different areas of retail, U.S. spending, the savings rate and everything. Shorter post, but I did a good post on that one, and we've got a lot of good stuff for you here this week. So sales pitch over, onto the sector breakdown. And for the sector breakdown, we're going to use our fancy-dancy little sector breakdown tool. Looks simple, but boy, there's so much here. And what I'm going to do is take a look at the one-day performance today. You've got nothing that really tells you anything interesting, right? You got a little pullback in energy, financials a little bit, but ultimately a little bit spread out there. Nothing tells us much. The 5-day is where all the action's at. What happened this week? Well, see that big bold green line on your charts there? Energy was the big focus. And in fact, energy gained 6% over this whole last week here. Quarter to date, which is just this fourth quarter here, incredible. Energy continues to be the impressive area there with gains of over 35%. So nothing to sneeze at if you're looking at that area. If we look at the financials here, oh, actually, let me go back. If you look at financials, nearly, I'm going to go, there it is. So it's nearly out of being the second to worst sector. Take a look over there. I'll get out of the way here. You got REITs pulling back and financials moving a little bit higher there. What an impressive rally in financials. We talked about that last night in our Wine and Wealth class about our portfolios, how financials and energies were picking up the slack, whereas they'd been a drag throughout most of the year there. So pretty excited about that. So pretty cool there. 20% gain year to date so far. I'm sorry, it's 20% gain from the lows here over the last quarter there. The action and the support comes from the big banks. We could take a look at that by saying, well, what's moving things here? If we look at the biggest contributors, you're going to have JP Morgan and all of its rivals, peers, competitors, etc. If you look over here, you've got Bank of America, you got JP Morgan in black, Citigroup, you got Wells Fargo, and US Bancorp all being the biggest contributors overall. Your weakness comes from the exchanges, which is really not weakness, it's more of a pullback. They were the stronger areas. We talked about that last night as well. They were the stronger areas in the market. They're just pulling back ever so slightly, so nothing to be too scared of there. And also the insurers, Progressive, they're not bad. They're just pulling back ever so slightly. So I'm not frustrated by that at all. And in the financials, great rally, right? You can't complain there for the rally overall. If we look at REITs, not too bad. Good attempt at a bottom today. You see it? I'll point you to it right here. So you've got a pullback in REITs. They were rolling over ever so slightly. And look what happened today. You had a continued sell-off, and then people decided to buy it up. You had what's known as a bottoming tail. We have a sell-off, and then, so at one point the candlestick was red. We all of a sudden erased all the losses, went back to break even, and then positive on the day. That is the second strongest day that you can have in terms of candlesticks as far as relating to one-day performance. If you're not sure what on earth is this guy talking about, I'm going to have you do something for me real quick. If you're either a customer or a research member, what you can do, if it loads, what you can do is go into our classes section. You can come over here. You can click on the little search button. Go like this for me. Just do candlesticks. Oh, sorry. You're going to type that in there. I typed it wrong, so I'm just going to do a little spell check thing. I'm going to hit the button again. And there it goes. Okay, I typed it right. So we've got 3 classes on candlesticks here to highlight those different things for you. They are free for clients. It is also free for research members as well to really highlight what's going on there, that bottoming tail. What does that bottoming tail mean? What does it tell you? And in REITs, we're awfully excited to see that because, well, we need a bounce in REITs. That's not one of the better areas in the markets overall. So happy to see that. And with all of that, we will move on to our watch list for the day. Get this thing jamming. Here's the thing. If you look at the Nasdaq, yep, we're going to look at the Nasdaq. There we go. We just moved to new highs, but we recently started pulling back. You could see it. It's, just a little pullback there. However, it's not the same names that were moving us higher just a few months ago. Remember this rally here? I would say the same 5 stocks every day. Same 5 stocks moved us higher. Same 5 stocks. It got so boring to look at that. Well, if we look from the election, since the election, there's been a 12% gain in the Nasdaq. However, it's all because of different names. In case you missed that, let's take a look at some of the top ones. First up is Moderna. Obviously, this is vaccine related. It's up over 100%, very, very extended, but that is one of the biggest contributors to the Nasdaq's rally since the election. Since the election, you got Pinduoduo up as well, although it's a Chinese e-commerce type site. Pinduoduo is likely a little bit higher because of now the confirmed restrictions that we would have on Chinese stocks, the new regulations as far as how they report their financials. I think a little bit of that has to do with that news coming out as well. Second best performer since then. Tesla. Well, Tesla's got to make the list, right? Soon to be added to the S&P 500 next week, to be exact. Next Friday. It's up over 45% since the election. I don't think it has anything to do with the election. Tesla's just going to be Tesla and do all the great things that it's doing. Applied Materials, in fact, three of the names on the list of top 10 names are from the semiconductor sector. This week, if you've been watching the closing beat, you know we've covered semiconductors quite a bit, so hopefully you learned something there. Up over 40% since the election. The second one that I was talking about was Micron Technologies. That's the other name. Actually, I take that back. There are 4 of the top 10 best performers in the Nasdaq 100 since the election are semiconductor stocks. On fire there. Here's the problem. They're extended. If you look at the SMH, you can see semiconductors as a industry ETF. It's been pulling back there, and I don't blame it. Right? It's done a lot of heavy lifting in the short term, so that's what you have. The last 2 names here, you're going to have Marriott, which is kind of interesting, really. It's a COVID sensitive name, you would say, obviously. Up over 35% since the election, gaining some momentum as people look for those back to work type stocks, back to enjoying life, hopefully, or enjoying our lives, hopefully. And although it had a bad day today, Expedia, obviously very COVID sensitive stock, but it's still up 30% since the election. Those are the top 7 stocks that have had the biggest contributions to the Nasdaq 100 since the election. Not one of them you will find is the Apple and all those names that we just kept talking about. So I thought that'd be interesting to share with you on a Friday. So hope you enjoyed. All right. But uh-oh. I can't even do the whistle because I didn't print it out. Here we go. Stocks in the news. We're gonna do that. We're gonna wing this one here today. First up, you got Disney. Man, you know, obviously they had Investor Day, streaming services and everything. They're killing it, right? Apparently, by this time next year, all of us will have Disney Plus in our house and be paying members of it. That was what they promoted anyways. Got a handful of upgrades today, and obviously a very, very strong but rare day that you can see there. Let me pull this down just a little bit. There we go. So QCOM, a little bit lower here today. The news was actually on Apple that they were going to make their own modem. It's not new news. We talked about this, I think, a year ago at this point. Apple's going to make their own modem. They were always going to do it, but for whatever reason, people are taking it seriously here today, and so QCOM is a little bit lower on that news. Broadcom is one of those that's also just a touch lower there. Got a little bit of a change in price target from a couple analysts, but mostly positive because of the earnings there. Up to 445 by UBS there. Truist, which is SunTrust, went up to 464. So a lot of price target increases there. Stock pulled back on earnings. I do believe they beat. Vail Resorts, these are the guys that have you help have a good time when you go skiing there. They reported earnings there. Now, look, this is an odd quarter for them. It's in between earnings ski seasons, so typically they do not beat on earnings. The stock was a little bit lower, as it typically is. In fact, only, what would I put down there? Only 40% of the time in this quarter's report is the stock positive. That's because they don't have a lot to say. We're looking forward to seasonal passes. How are those doing? They're doing great for Vail Resorts, by the way. They did have to give some credits for last year because people didn't get to use all of their ski season. But with all that accounted for, season passes this year are off the charts. They're very happy with that. It only beats on earnings 36% of the time in this quarter, and that again is because there's not a lot to go on. We're in between ski seasons there. So if you see that one lower today, I don't think it's the end of the world. Lululemon, this was earnings related here as well. This would be, they beat on earnings there. Did get a price upgrade there. Who was that? UBS was pretty bullish today. They went around upgrading a whole bunch of stocks that had pulled back. If you don't know, UBS does that. When they like to upgrade stocks on pullbacks rather than when things take off there. So that is that one. And a couple others I'll throw in there. I think this is kind of unfair. I'm going to do this is going to be in our notes from Jazz this weekend. The IPOs that have come out, are IPOs that are coming out more profitable or less profitable? Here's DoorDash, for example, went public this week, but it gets reported as a monstrous triple-digit gain, but really you didn't get to participate because you weren't able to buy it before it went public. When it went public and it opened up at 181, okay, you missed the meat, right? You weren't able to participate. I'll also say the same thing about Airbnb, right? So this also, triple-digit gains, obviously went public much more successfully than they thought, but you didn't get to participate in that. So what's the real return for the investor? What we're going to do in our notes from Jazz this weekend is I'm going to go over the recent, I'm going to go back as far as I can, actually. I'm hoping to go back good 25, 30 years and take a look at IPOs and see, did you really make any money? If you invested in these, was there a chance? And if there was a chance, when was the sweet spot? So be on the lookout for that. But I just think it's unfortunate that all of the meat on the gains there happened before you or the retail public got to buy the stock. You all sort of at the moment are getting the shaft there. Not too cool, right? All right, I'm going to take questions there and then I'll get out of your way because it's Friday. I'm sure you got some things to do. So we'll see. What do we have here? Is next week triple witching coming into the end of the quarter next Friday, I believe? There you go. You think that's good or bad for your Tesla, Harry? Remember, Tesla gets added on Friday. It will get added on Friday to the S&P for first available trade on Monday, the 21st, right? So just when you see the headlines there, it's a little bit misleading. Yeah, it gets added next Friday, so it's available to trade on the 21st in the S&P 500. That will be the talk of the week, I would bet. Could you show us technical analysis on Solar Edge? Probably could do it from my head there because we talked about it there just last night, but we could do that. Solar Edge, one of the really, really good performers out there as far as the alternative stocks out there. All of them, solar stocks, I mean, it just killed it higher there. You've got a handful of upgrades there in not only the stock, but also in this area, this industry here. So you got Piper Sandler with an increase there, price target of 325, that puts it above new highs. Basically what they're trying to say is there's still a lot of meat on the bone. It's going to make new all-time highs. It's not very extended anymore. Remember we talked about it here, needing to pull back. It did pull back. It has since worked all of that off. The uptrend hopefully continues as Piper Sandler hopes it does as well. Yep. DoorDash valuations. Yeah, you could argue that as well. And will they ever be profitable? Have you guys looked into their financials at all? Will this company actually ever be able to be profitable? You can make an Airbnb. Yeah, all right, I get that. But DoorDash, I don't see it. And I hate to be the skeptic, but I'm going to be. I don't know. Yeah. I love it. That's cool. If I missed a question, post it again because this thing is on. I got it on this screen today. Normally it's on this guy right in front of me there. Thoughts on UPS? So obviously a little bit of excitement around vaccine distribution. It's not a big portion of their revenue. They're not going to make a lot of money on that, so don't buy it because of that. Dead money in the short term here. You hope it wakes back up. You have to lean bullish because it's clearly in an uptrend. It's just calm at the moment. In the ultra short term, the last like 3 weeks or so, nothing. There is no good reason to suggest that you buy the stock while it's moving sideways if you're looking to start a position. If you own it, you confidently hold it because you have to lean bullish here. And in no way would I suggest that it's a short or anything like that. Yep. I love it. I love it. Well, I'll wrap it up there because I've covered everything that I want to cover. And I think I've... had a good week. We did a good job there. I'm going to get back to focusing on our new dashboard. Can't wait to get that thing out to you guys. So we'll work on that. I'll wish you guys a great rest of your day and, of course, a good weekend. Stay tuned. I may pop up publicly here over the weekend just to show off the dashboard a little bit and take some questions. I'm going to test it out, I think. So if I see you, I see you. If I don't, enjoy your weekend, and thanks for all your support. Much appreciated.